Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good morning. Ira Epstein of Linn Associates with your morning flash review, and this is for May Day. This is first day of May 2018, and the time 9:15 a.m. So different parts of the world are closed today. Next we got Cinco de Mayo coming up, so quite a few things. But it's beautiful in Chicago. First day since I think November that I went to work without a jacket of any type. We're going to be 83 here today, so it's pretty good weather. But the markets aren't hot. They're ice cold, and as you can see, down hard. Big problem for the market to strengthen the dollar. We have today the two-day FOMC meeting beginning. Metals are getting smashed on this news. China said that they are not happy with the trade proposals that they're talking about. That's putting copper under pressure. The president did come out and give a waiver until June 1st to many countries, not all because he's making deals with some of them. They have memorandums of understanding, letters of understanding, and those deals seem to be getting done. But the ones that he hasn't made the deals with, and there's a host of them, the European Union, Canada, Mexico, I can go on and on. There's quite a few. Watch out. China, of course, the big one. Then if we look at the energy market, market getting a correction today. The question, of course, on these is, will they hold? And the reason is, which way is the president leaning on oil? And if he's leaning on putting sanctions back on Iran, you're going to take oil off the market. Most of the decline we've been getting is Venezuela. Their structure is just falling apart. And now if you add to that taking the Iranian oil off the market, you get rid of some more supply. That doesn't mean others can't make up a portion of it, but that's where you're at. Bonds and notes. Notice how the market is starting to look at the current economic data as being more on the side that's allowing further interest rates. I'm hearing lots of talk that the Fed will not do anything tomorrow, but June's a given for another rate hike, September, and some are talking December. So you're getting quite a few talk there, people talking it. Grain's getting another bid, and that's even with the strong dollar. When we take a look at the news today, construction spending down 1.7%. They were looking for it up 0.5 point. In February, they revised it to up 1%. It was up only 0.1. So it's all over the board. If you look at the two, they pretty well, one checks out the other. Manufacturing, and this is the ISM, 57.3. They expected 58.5. Prices went up a little bit. The new orders stayed about where they were. Inventories dropping, if anything. Employment index dropped a little bit, interesting there too. And the production index, a little soft. The market U.S. final April manufacturing PMI came out, 56.5. The preliminary was 56.5. That's all right. I said the Fed begins its two-day meeting right now. U.S. tariffs were given a 30-day reprieve, but agreements in principle have been made with Argentina, Brazil, Australia, South Korea. So that's good. NAFTA's getting closer. It looks as though 75% of the origin is going to be the number. Now the question is the wages, and I know that there's a lot of questions in Mexico with as low as $3 wages. What's going to happen with that? Stats Canada reported that the GDP there increased 0.4 in February from the previous month, and that's at a bigger pace than the market was looking for. Survey today shows that activity in the United Kingdom's manufacturing sector dropped to a 17-month low. If you're looking at the pounds, just going down. Brexit is not going well, but it goes in phases. It goes not well, then it sounds like it's going well. The problem seems to be Miss May, Prime Minister. The Royal Bank of Australia left their interest rates unchanged today. Their highlights were volatility due to U.S. trade concerns, a stronger growth is taking away the capacity in the economy, GDP. But I think what they're really looking at, and that they did not mention, was enough about the trade. If the U.S. goes at it with China in terms of they can't reach a deal, Australia gets hurt. It's that simple. They give a lot of product. Yes, China will have other markets, but we're a monster. And if we cut our trade down, do they need all that product? That becomes one of the areas you've got to look. I want to remind you about our chart of the day. Each day, sometimes 2 charts a day, we send out and give you an idea as to where these markets might be headed via a technique that the Linn Associates developed called price counts. It's free. It comes to your email. Take a look at it. If you want to learn how to do price counts on your own, we have PDFs to do it, the software, all for you free. How do you get it? Call us at 866-973-2077. You can go to our website, www.iraepstein.com. You can click up here at any time if you're watching me on YouTube, or underneath us, it'll say on many websites, click here for Ira's free information. Again, here's the phone number and here's the website. Chart of the day, each day in your mailbox. Take care now.